Welcome to another episode of Break Away from the Rat Race. And today we have Tim Milazzo, and he's a co-founder and CEO of StackSource, which is a tech-enabled company that basically helps you with the financing of your commercial real estate investment. StackSource has now completed over $250 million in commercial financing transactions, which is amazing. And they are kind of reinventing the stagnant mortgage brokerage model. And now it's going to be, everything is going to be tech enabled and more easily accessible, and access that marketplace to finance your best real estate deal. So Tim, welcome to the show.
Eric, thank you so much for having me on.
So let's start a little bit before we go. I know everybody wants to talk about StackSource right away, but let's just kind of talk a little bit about your background. I think you came from a tech background with Google and Facebook and stuff like that. So I'd like to understand what brought you into that? How did you discover that need for real estate financing for investors? And then how did you build a solution?
Absolutely. So you're right. I worked at tech companies for several years, and the first things you'll see on my resume are actually advertising technology jobs for Google and Facebook. And then I'm right into real estate finance. So what actually happened here, Eric, was my father was a commercial real estate broker. And I grew up in the suburbs of New York City with stories at the dinner table about commercial real estate deals and negotiations and what was happening. And I interned at financial services companies and at real estate companies, and I never thought that I would be a real estate professional because I loved technology. I was coming through college at a time where smartphones were coming out, and I was really interested in what was happening on the internet, and internet companies were getting huge. And I pursued that path of being in tech and advertising and online tech. And I got back into the real estate sphere because I really saw an opportunity. I was connecting back in with some friends that were in the real estate industry and building their careers that way. And we went together to a real estate tech meetup in New York City.
Okay.
And my eyes were opened to this world of my dad and the commercial real estate brokerage and the world of technology. There's so much opportunity for them to come together. And technology to insert and really bring a new level of simplicity to transactions, transparency, and commercial financing was right there as this huge opportunity. It's not transparent. It's not efficient. People don't like their mortgage broker. They just have to deal with them to get the best loan. And I saw the opportunity for something better.
Yeah, exactly. And often, your mortgage broker brings you deals and stuff like that. I said, no, and then they don't seem to really understand what you're looking for. And then you tell them your criteria, and then they bring you things that, oh yeah, this guy's going to be able to do it. You go on the call with that lender and stuff like that, and say, oh yeah, no, we need this and we need that. I mean, that was one of the criteria. I don't want to do this. I don't want to do that. And so why am I talking to you? And then you kind of hang up from that point on.
Yeah, it's not exactly a menu of available financing options. You walk into a restaurant, you expect to get a nice menu, and when you point you shouldn't have to have so much effort to get, first of all, the menu, to understand what is available on a deal. That's traditionally been a very hard process, especially for commercial assets or for portfolio loans. If you're rentals on a residential mortgage, exceedingly easy today. Rocket went public last year. They're worth $40 billion. Guess what? They do more loans than any other mortgage company in the United States, and I believe and they make it easy to click and get a quote. And you get into commercial mortgage territory, and it's not only get the menu option, you can't even get the menu itself. You don't know what loans are available unless you're talking to a guy in a suit. And that's not the way it's going to be in the future.
Yeah, no, I agree. I mean, the commercial space is still kind of like the old club kind of environment. you don't, a lot of these numbers are kind of in somebody's back pockets. The commercial broker, the commercial real estate brokers, they kind of know some information and stuff like that, and you kind of have to be on the in order to get in there. And it's the same with the commercial brokerage. I mean, we've been pretty lucky with our apartment buildings, with the commercial lending that we got. But again, it's because of the connections and all of that we were able to get in and get the right deals. But yeah, so I think it needs to be, I agree. I mean, I think it needs to be more open and more transparent and more accessible. And I think that's what StackSource does for investors. Is that right?
That's absolutely it. There are several problems that could exist for someone seeking a commercial mortgage. One, if you're new to commercial real estate, you can have a knowledge gap of how is this going to differ versus a residential mortgage that I've gotten on my other rental properties. What if I have to roll it up into a portfolio loan? So there's a knowledge gap, and we try to make it really easy to understand. These are the types of financing that are available. Another problem would just be, my local bank is not competitive. If you have a small sphere of relationships and you're not getting the right loan through your local bank, where do you go? Are you going to call 3 more banks? Are you going to call 12 more banks? Are you going to call every single bank in your region to try to figure out who has the lowest rate or the best terms today? I mean, these quotes are very different from each other, from one bank to another bank to a credit union you wouldn't have thought of. And it's not as commoditized as a residential mortgage. There's not that's dominated by a couple of national players. And so, that's another problem. When you start getting to like a really large portfolio, you have really the problem of trying to truly maximize like your IRR on every deal, because you're syndicated to investors, and you have to find that hot source of capital in order to do your fiduciary duty to your investors. So, there's a couple different pain points that we've identified at different segments of the market. We do a lot of multifamily financing. We do a good amount of rental portfolio financing, as well as other real estate classes like retail or office. But one of the big problems is, what if you're not in New York City? What if you are in a tertiary market in the middle of the country, and you're buying, if you're trying to refinance a portfolio, or if you're trying to finance the acquisition of a small multifamily property, is it really obvious who to go to and how to get the best financing quickly without burning your hours? That's a real problem that we hear. So I think the best way to kind of illustrate that is kind of go through an example, so let's say I have like this, I just found this 12-unit apartment building. I have it under contract, and I'm trying to figure out my capital stack, which is what I kind of like your name too, because you kind of have a StackSource, and we keep talking about capital stack. Where are you going to get the funds from that? And so walk us through kind of me as an investor, like what do I need to do to kind of engage StackSource to find the capital that I need to acquire this building? Let's say it's around $1 million. Sure. So if you're buying a property that's 12-unit multifamily, and the average person actually finds us online. We have people that find us online through one of our blog posts about how prepayment penalties work for commercial mortgages, or we have these blog posts that a lot of people find, or maybe our next borrower will hear me on the Rat Race podcast. It's a great one of my favorites. And so you're going to get to a button that says, get a loan, request loan quotes on StackSource, and it's going to start to ask you questions about your property. What type is it? What is the address? What is the current income on that property? Those 12 units, how many of them are occupied? And you're entering information into a portal that really, you can go through this as fast or as slow. You can, if you have trouble with some of the questions or some of the documentation, you can call a StackSource capital advisor as well, of course. But we're getting information about a deal, and we're doing 2 things with it. First thing is, the more we can find out about the deal, the more precise we can be. Out of all our hundreds of lending relationships, and we have banks and credit unions, we have national portfolio lenders, we have local portfolio lenders, out of the hundreds of lending institutions that are plugged into StackSource, whittling them down to those most likely lenders to give you the best loan on that deal. And location matters, size matters, your track record matters, the property's finances matter. As a matter of fact, a according to the algorithm that does this matching, 71 different things matter as to whether you match to that lender.
Okay.
The second thing we do with the information is we start pre-populating a debt offering memorandum. What that means is it's a fancy, well-structured, well thought out request for a quote that goes out to the lenders once the deal is approved on our system. There is a science to how you get the best loan quote from a lender. It's not, calling up your local relationship bank and saying, hey, what's the best you can do on multifamily? It's actually describing your deal in the way that bank or lender's credit committee is going to give it the most favorable response. So those are the things that we do with information entered in our portal. We match the right lenders.
So am I going to get like a bunch of emails from all the kind of like a lending tree or something like that, where you kind of enter your information and then you get like your phone rings off the hook? They haven't read anything about the loan that you want, and then they start asking you, what's your name, what's your phone number? You called me. So is that going to be like that? Is that the same experience?
No lenders get the contact info from a borrower on StackSource until the borrower accepts that lender's quote. So actually what's going to happen is you're going to get one point of contact with a StackSource capital advisor. There will often be one phone call with a StackSource rep, especially if the borrower needs guidance on, hey, what should I be asking for here? Can I get a permanent mortgage on this property, or do I need a bridge loan? And there's often that conversation, but it's one person and it's a StackSource capital advisor. And then if your deal gets approved, and not every deal gets approved because we're gonna vet, does this loan request make sense? Does it have a chance of getting quotes from these types of lenders, or do we need to adjust it? Once it's approved, those lenders get a download on the information, and they're going to have to quote your deal and give you a competitive quote before you ever choose whether they can get in contact with you.
Okay, so that sounds very good. What kind of loan? So let's continue through the process before I jump into another topic. So now I've looked. Let's say I have like multiple quotes that I'm interested in, so I can select more than one and kind of like go into more of the detail. So what's the next? So I just click on the portal and say, okay, this one looks good, and then this one looks good, and then it takes them to the next step, which is.
So the next step would actually be negotiating those lenders down on the borrower. So this is where the capital advisor that you got assigned on day one is going to keep with you. They are lenders and mortgage brokers in their past lives that are now more efficient using the StackSource platform. But their business prowess is like why they work for us, and their ability to negotiate those lenders down on rates, fees, and terms to make it the best loan for the borrower is what happens next. Now that is
so you're going to help me negotiate with the lender.
We are unequivocally on the borrower's side. So while we're a platform that sits between lenders and borrowers, we're the advocate for the borrower. You give us the green light to use the information that we've collected and to source relevant quotes. We're then actually going to help you negotiate the right loan from the lenders. Now there are some quotes and some loan programs that are not negotiable. If it's $1 million multifamily loan and it's fully occupied, you may actually get one of the quotes that you get, we would not take a lender reviewing it and submitting. You'd actually get an instant quote from the Freddie Mac small balance loan program on our platform, and that would be available, and you'd be able to change the prepayment penalty, change the years of IO. You'd be able to choose different loan options, and you're going to get an exact programmatic quote on here's your interest rate, here's your max loan proceeds. That one not negotiable because it's a government entity that's going to back automated quote. If it's not an automated quote, it's potentially negotiable. We can work with those lenders, and at the point we get to the point where the borrower has chosen their selected loan, and we'll help with things like analysis of, well, hey, should I take the 3% quote, or should I at that 70% leverage, or should I take the 3.5% quote at 75% leverage? Which is better for my deal? And there is a screen in the StackSource portal that shows you like a comparative analysis of your return for different loan scenarios. But that's all helping to get to the best loan possible to move forward and sign a term sheet.
Yeah, that's right. Because sometimes if you're planning, depending on your exit strategy for the loan, I mean, you may want to have like, you may have different options that you want to have. You may want to have longer terms and all of that.
Prepayment, recourse. There are several things that matter to an investor. stage with the commercial mortgage. And, you have some of these, you're going to need to make a decision and some trade-offs. The capital advisor can talk to you about that and then hopefully enable you to make the best decision. And there will be trade-offs in commercial mortgages. It's not only about rate. There are structures.
Oh yeah, of course. Yeah.
And put into your portfolio.
It's all in the terms.
Yes, there are several terms that matter. And some of these can be traded for interest rate. Getting a non-recourse loan gives you peace of mind. It may also be a higher interest rate. And, understanding the trade-offs is actually part of the trick.
Yeah. And that's good. So, and then you showing actually kind of like the comparison, I guess, numerical comparison about, hey, this is what's going to happen. And maybe we can then run some scenarios and say, well, if my exit is to sell in 3 years, this is what it would look like. And this is, so yeah, that's phenomenal, because a lot of people, they kind of just eyeball it and say, oh yeah, that makes sense. But not many people actually do the calculation to figure out what that looks like at the exit point.
The calculations aren't always easy. You may have an Excel model of how much cash flow you're expecting from the deal.
Yeah.
We've heard from borrowers that without our platform, they're saving a different version of the Excel model with one loan quote, then save a different version of it with a different quote. Oh, the quote's changed. We got to go update. And it gets messy really quickly. And it's not easy. We're trying to make that process as simple as possible. Simplicity and transparency are like our core values.
Yeah. So other people bringing the money they're all financial institution. Any equity? Are you bringing any equity into the deal in the helping us raise equity as well?
So StackSource does have different types of capital providers on the platform. We have some of them that are banks and credit unions, those financial institutions. Some are like government entities like Fannie Mae and Freddie Mac.
Yeah.
Others would be private lenders. We're not actively sourcing equity for deals at this time. It's interesting because, if we're sourcing a loan quote and somebody's coming up short and there's a gap with equity, it seems like an opportunity. What we do not do is try to fund a deal from the crowd and get a whole bunch of passive. Lots of people building, equity syndication platforms. It's an area of interest for us as we are now closing commercial financings, and we're up to over 150 commercial debt deals done. Equity will be a potential expansion, but it's not something that we have really taken on as a core practice yet. When we do it, we want to do it.
Yeah, I like that. I like that attitude, that kind of staying in your basically your core strengths and then focusing on that until you have it really locked down and then expanding from that. So I really like that.
Maybe would that be another time to talk and catch up about equity?
Absolutely. And I think also equity, you want to know, on the equity, the private equity side or just a partner, you kind of have to have that relationship, and that helps a little bit. So from their side, from the equity partner side, to know who the sponsor is, and then for us also, who are we dealing with? What kind of, how demanding are they going to be in terms of getting information or reports or stuff like that? So that's very good. Are you getting any kind of referral fees or anything like that from these financial institutions? So these transparent about that as well?
I love that question. And so many borrowers of commercial mortgage loans don't even realize that is possible and legal, and it happens because if you're getting a residential mortgage, there's a Consumer Protection Act. And if your mortgage lender does that, somebody's getting arrested. Now you flip into commercial mortgages, and this happens all the time. There are kickbacks from lenders to brokers. And what's the problem with a broker getting a little kickback from lender? The problem is, if you're telling a broker, hey, get me the best financing available on the market, and one of the lenders is saying, hey, I'll give you an extra half a point, we really want this loan, that broker no longer has an incentive to show you a better loan that you could get. Leads to laziness at best and fraud at worst. And so with our commitment to transparency, that absolutely extends to the fees. We do not take lender side fees, kickbacks, referrals in any case, except where there is no origination fee to the borrower. So in that case where the Freddie Mac small balance loan is an automated quote on our platform, the economics are built in to that loan already that we get paid. And so we take no borrower origination fee in that case. Every other case where we're getting paid by the borrower, it's not an automated quote, we're a service, we're helping negotiate. only get paid at closing upon successful close. You'll see our fee on the closing table, and you can rest easy. I would encourage, if you have any listeners that are seeking commercial financing, and many of them may not work with StackSource, ask that same question to your commercial mortgage broker.
Yeah.
And even go to the point where like you should negotiate their fee agreement and put that in as a clause that they cannot take any referral fee, yield spread premium, or other kickback from a lender right in there, and see what they do.
Yeah, see the reaction.
The reaction, because it's all too common in our industry.
Yeah. Oh wow, that's a good idea. I like that. So all right, so then we picked a quote, you negotiated down. I mean, that's amazing, because it's nice to have somebody that's an expert that has negotiated many deals to kind of help us kind of find the best deal for us. And we finally select the last one, and we say we'll go for this one. And so what happens next?
So signing a term sheet with the lender that we've negotiated that deal with would be the next step. And typically submitting an expense deposit. This happens in residential mortgages as well, where you put some money down in escrow for the deal. Yeah. Money can be used for appraisals and environmental checks and surveys. And you actually submit that directly to a lender on the commercial mortgage side. And so that lender is going to collect an expense deposit that will vary based on location and type of building. And they're going to be going through their due diligence and closing checklist. Now, your capital advisor stays with you through the process, and our job is not done until this deal is funded, right? That's when we get paid. So our incentive is to stay with you and make sure this goes smoothly. We are not a lender. We're never a direct lender. We are a borrower advocate, and we're a portal, and we're a marketplace. We're trying to make sure that these things happen, and they happen well, and we take a responsibility, but we're not the lender. So the lender is going to have a due diligence checklist. They're also going to have a credit committee. Typically at a private lender, this is just the one or two guys that own the private lending business, and they give it a stamp and they say, yes, like we're moving forward with this loan. If you're with a bank or another financial institution, being clued into what's actually happening with the credit committee is fairly important, because your loan officer is likely not even on that credit committee. And now he's taking that file and that term sheet you signed, and he's saying, hey, I've signed up a great loan. Like, aren't you guys proud of me? Those guys hopefully are proud of him because he's done his job correctly. The chief lending officer says, good, you found the type of loan that we want to do, and this is appropriate. There are cases where that does not happen, and the chief lending officer or somebody else that sits on that credit committee is not proud of Mr. Loan Officer because he's tried to make a loan that they don't approve of. And that is one of the worst things that can happen if you're already have hard money, in escrow with the seller and getting close to the closing timeline. And that is another area where we advocate for the borrowers. We make sure, hey, is this clear with credit committee? Usually before the term sheet is signed, but if we're in a rush, it's like, okay, we're going to get the deposit, we're going to get the appraisal going, but monitoring what's happening with the credit committee, what requests for information there are, and making sure that goes through smoothly. And then if that doesn't happen, like, having a backup plan, and then ultimately like StackSource, like kicking off lenders off the platform that are like bad actors and borrowers are having bad experiences with. And showing borrowers, hey, here are other ratings from other borrowers that have used this lender. Because while we're not in control of that process, we like to advocate for our borrowers in a way that makes this more certain that these lenders are going to do the right thing.
Okay, wow. Sounds very, very interesting. So let's talk about how you make money.
Yes. So successful closing, we take a percentage of the loan amount. And that's going to be something that we talk about right up front, right as you submit your deal. And we talk about with this type of deal at this size, typically 1% of the loan amount, which is exactly what commercial mortgage brokers have always taken. And we're trying to add more value through transparency, simplicity, and speed, because your loan's going to close more quickly with StackSource. You're going to get more quotes more quickly with StackSource. So if we can do all that and save you the 41 different calls to lenders to figure out who's the best in the market, I mean, mathematically, even if it wasn't any less work and any more speed, and it is, and even if it wasn't more certainty of execution, and it is, we can get you a better rate, more loan proceeds. If we can negotiate a better loan, it's like already mathematically worth it to pay a 1% loan amount. But in the cases where, a borrower has a great loan quote from their local bank already, we'll usually just tell them, hey, let's not go through this process for the next several weeks of getting you the right loan with one of our lenders. You should just close. So if our fee is something that stands in the way, we'll usually be the very first ones, because we won't want to waste our time either in saying we can get better financing when we can. So we're usually about 1% of the loan. That will vary a little bit based on size. But that's how we make money. We make money when we successfully do our job for our borrowers.
Okay, so you mentioned the timeline. So how does your timeline from the beginning, the initiation, all the way to funding the deal? I know that's kind of changed a little bit, but maybe an appropriate timeline that you can compare how you're performing compared to typical industry average.
Yeah. It'll depend a little bit on the deal type. So if we're talking about our $1 million 12 unit, if all 12 of those units are occupied and it's got great cash flow, and you really just want the best rate, non-recourse, and you want to have that loan for 10 years and forget about it, well, within 2 minutes, you can have an automated quote from a Freddie SBL program. If you decide and you chat with the capital advisor, hey, I'm not likely going to get a better non-recourse option, that's important, you're signing the term sheet extremely quickly because you have an instant quote. And so that turnaround is like several days shorter on the front end versus what you would do traditionally. If we're shopping the full market, still faster than a traditional broker, but it's going to take some time because we're going to have conversations with the lenders, and you're going to be a couple days at least to get all of the quotes in and make sure we don't miss somebody. But it will vary. If you're in a hurry, being in a hurry for a commercial deals don't usually close in 30 days.
Yeah, exactly. Yeah.
You close a house in 30 days, your lender is going to be ready. Like, it's much more streamlined on that side. It doesn't usually happen. If you're in a time crunch on commercial, it's usually a bridge loan. It's usually transitional financing. I'm going to have this loan for 6 months or 12 or 24 months. It's a higher rate, and I don't care because, I need to close quickly and I don't want to lose the deal, or like this is a value add deal anyway. I'll refinance it later. Bridge deals can close very quickly. Now you're within that 30 days. Fastest we've closed is about 2 weeks. But if you want the best financing with the lowest interest rate, and we're talking 45 to 60 days from initial to close. And that is an industry thing. Appraisals take a long time, especially right now as we're coming out of the pandemic. Appraisals have weeks of turnaround time. That's the one thing that's going to be holding you up. It's not going to be, geez, I don't know what my quotes are.
What's your average loan size?
Right now on StackSource, our average loan size to date has been $2.5 to $3 million. We do more loans of like the less than $1 million variety than most commercial mortgage brokerages, because it's just not worth their time to be doing the manual process over and over. We've streamlined this. And so we do a lot of loans that are less than $1 million, but we've also done loans of 30. Our biggest loan this month was a $33 million land development deal. We do loans in like the the $10 to $50 million space as well, but our average I think is like $2.6 million to date. Okay,
so I have a lot of investors that they are in they're building a single family portfolios, and some of them are they have like 10 properties, and now they're under their name, under Fannie Mae, and then now they're trying to get their husband or their wives they're putting more mortgages on their name. And so they're kind of like they're going to be tapped out pretty soon. And is this something that you can help with in terms of getting a portfolio loan for them? And what are some of the criteria for these loans in terms of minimum value for the house, minimum value for the overall loan, debt coverage ratio, etc.?
Yeah, absolutely. Good question. First answer, yes. So we absolutely help investors with portfolio financings. Now, for us, like both from a licensing and an operational perspective, we don't touch portfolios of less than 5 doors. So like if you have 3 duplexes, you're good, right? It doesn't have to be 5 properties, but we have to have 5 units, 5 doors. At that point, when you're doing a portfolio financing, there's a couple things that are going to happen, that your accountant would just be able to tell you, but you're going to move it from your own personal name to an LLC where it's going to be owned. And that LLC is going to be the borrower, and you're going to sign the loan as a guarantor. And whoever else has at least 20% ownership in that deal is also going to sign onto that loan as a guarantor typically. You now are in commercial mortgage territory. It's a little bit more difficult, a little bit slower, and it is a little bit more expensive than a residential mortgage. But the good thing is, this is the lane we swim in, and we advise on this. So a couple of things about those loans. It's not going to be a 2.5% interest rate like you're used to on, if you're a conforming, if you've got like a 750 credit score right now, you're like a conforming Fannie Mae or Freddie Mac, you can get rates in the twos. Not going to happen right now for portfolios.
We're not getting 2.5 anymore anyway.
It's probably in the high threes into the fours. If you're talking about like a more distressed, or you're buying a bunch of properties at like bankruptcy auction or something, it may be in the fives. It may be like 8% if you want the most flexible portfolio loan, because it's like, shorter term and you're paying interest only payments. And like, if you want the most flexible, it's in the higher single digits. So that is more expensive. There are prepayment penalties. It can be recourse or non-recourse. So there's no such thing as a recourse, like personal consumer mortgage. The worst thing that can happen is like you stop making the payments and the bank takes back the house. With a portfolio deal, like if you are bankrupting every property and you're failing to manage it, or something goes wrong, if you bankrupt and it's a recourse loan, they can come after your personal finances too, even after they took back the houses. So you want to understand, non-recourse is available. It is not available from your typical local bank that says they can do portfolio loans. There are some national lending partnerships we have that do non-recourse portfolio deals. Again, the interest rate is going to be a little bit higher. It's going to be in the fours for something like that. In certain areas, it's going to be 25-year amortization. In certain areas, it can be 30-year amortization. And it's very difficult to do this type of mortgage of like the lowest per unit value. If you're talking about houses being worth less than $50,000 as according to an appraiser, this is not a good route to take. You should be careful acquiring a large portfolio of those if you're not able to do those with residential mortgages, because there's very little to any demand for the very smallest values. You start to get up, or at least we're over 50, you get over $75,000 per unit, that even better, 6 figures. Now, like there's a lot of demand for that. If we're talking about, 150 to 200, tons of demand. 50 below, be careful. You're probably going to have to use a residential.
So okay. So we're about like above 75 for sure. So for all our properties. So okay, and then
more doable.
Okay, so that's good. So and then so that sounds very reasonable. I think so I think we can if we have a lot of users, not users, but investors like that they're at that point now where they want to build a portfolio, but they're kind of running out of runway here.
There's good reasons to do it. I mean, obviously there's a list of 10 mortgages that you can have in your name, but you're dealing with one lender now. And now you can average the income across all the properties. If one goes vacant, that's not a problem with one lender, because, hey, you refinance 8 of these, one of them goes vacant, no worries, you have cash flow from the other 7. So there are good reasons to do it. I wouldn't push anybody to do it very quickly if they're on the first couple of rentals, but once you're building a portfolio, it actually starts in the world.
All right, Tim, anything, so before we wrap up, anything you want to add, you want to mention?
Again, you do not need to use StackSource's financing service where we get 1% just to take advantage of some of our tools. So I'll put that out there. We have a free browser extension that essentially acts as an embedded commercial mortgage calculator that you can activate on any website. So you're looking at LoopNet for like a 6-unit multifamily, and it's not on the MLS, it's not on Zillow where there's a mortgage calculator, and Zillow's is a residential calculator. Anyway, maybe you are on Zillow and you can activate our commercial mortgage calculator anywhere. If you go install StackSource's browser extension, you can then
that's nice.
Options, and it tells you the cash flow of the property. So that's something you never have to tell us who you are. You get some value out of that. You see the StackSource logo, maybe we'll work together someday, but you absolutely don't have to. So I'll throw that out there. Free, download today, give us feedback on it, but feel free to use it.
Wow, that's amazing. Well, Tim, lots of information. I think this is amazing. I think this is going to be a game changer. I think for a lot of people that are building a passive income portfolio, and also the next step for them is going to be to move into commercial and multifamily kind of investment. So I think once they start building the relationship with you and see how easy it is to work, I think it's going to be phenomenal growth for everybody, your company, and as well as my investors. So thank you very much. Thank you for your time, and talk to you later, Tim.
Thank you for listening to Break Away from the Rat Race with your host, Eric Martel. If you want to share your story and experience with our listeners, please message us on Facebook at Break Away from the Rat Race. Also, please subscribe to our YouTube channel and our podcast on iTunes.